Tushar. I'm Ankur Mishra. In next half an hour, we'll discuss all the news and updates that matters to you around the globe. But let's get started with the big news of the day. Indian economy grew by 7.8% in Q1, the highest in 5 quarters before disruptive U.S. tariffs were imposed. The GDP growth in the first quarter of the ongoing fiscal year was mainly due to good showing by the farm sector as per government data. India remains the fastest growing major economy as China's GDP growth in the April to June period was 5.2%. Let's listen into some expert voices.
We need to watch out the implication of the tariff, how it plays out. So part one, there is a headline sort of implication of the tariff, but part two, that there can be job losses in most of the sectors because most of our exports to the US are labor intensive exports, which includes textiles, gems and jewelries, etc. So there could be a negative reaction on the domestic consumption side also, apart from the loss of the exports, which will negatively affect our GDP numbers. On the other side, we will have a positive in terms of the restructuring of the GST, which is expected to be positive for the consumption. So somewhere we need to take into cognizance the pulls and the on the either side on the GDP number. Immediately, we may not be changing our GDP numbers for the full year.
Of course, this is on the higher side. People are talking about revising it downward, and from that perspective, I don't really see, based on just this GDP number, any impact of changes for the RBI's own forecast, which will come in October. I think, of course, RBI forecast will change as to how we see the tariff situation moving. And October, we still have the whole 1 month before the next RBI forecast comes in. But particularly answering your question, will this number have any effect on their forecast change? The answer is no, because irrespective of this tariff situation also, while this number has come up, but there is an expectation, the second half may be much lower than what it was in the first half.
Because part of this 7.8 number is also impacted by deflator numbers, especially on the service segment and a few other segments as well. So if they do bring out that point that it is kind of inflated, it is not picking up what is the actual momentum, and there are sufficient risks ahead. If that's how the narrative goes, then I think there is room for at least 1 or 2 more cuts. At this time in our baseline, even ahead of this GDP number, we didn't have any more cuts. And after this outcome, I think I'm tending towards keeping it on hold and see if the governor has any comments between now and when the central bank meets next. And the final point on the currency, of course, the currency is also weakened a fair bit. It's above 80. It closed, dollar rupee closed above 88 today. So a lot of currency weakness, whether we want to cut rates more in the face of it, is another thing that the central bank might look at as well.
All right. Also, important data